Welcome. I am the fxsavant, and in this video we're going to do another trade breakdown. Let's get to it. We have GBP USD, and firstly, you know what I got to do. So GBP USD buy. We got GBP USD buying right there. Anyways, that's what the structure looks like. GBP USD, and we're buying here with the numbers on screen. So let's get into it. In this one, we're going to talk about having our time frames in alignment. It's going to give us the best probabilities in order for us to win the trade. So wouldn't it make most sense if all the time frames, if you're monthly, weekly, daily, 4-hour, hourly, 15-minute, 5-minute, 1-minute, was all pointing in one direction? Wouldn't it make more sense that that's going to go in that direction? Or you have the best probabilities to win your trade if you're in that direction? So since that makes the most sense, that's what we're going to talk about today. In this trade, we can apply those rules or apply that style of trading. We can apply that concept to this trade. So we have to do a multi-time frame analysis using structure the right way. That's the only way we know how, only way I know how. It's what I teach in the program, which is open and available for you to join. But let's get into it. All right, so if we use our example, our GBP USD example, and we are on the monthly time frame, what can we notice on the monthly time frame? Well, if we look at the big picture and we get a lot of it in here, we can see that we failed to break this low, creating a double bottom in this area, double, triple bottom. Either way you want to look at it, it is rejection from this area in order to create a move to the upside. And with this pattern, what can we identify with this pattern? We can see that we had a move to the downside, had a pullback back up. We had another move to the downside, which is the failed impulse. And now we're currently making our way back up. Currently right here, what you would like to see is the market actually reach this level before we get another pullback and create a W formation, inverted head and shoulders formation, completing the W formation. And then we continue to see more bullishness to the upside. So on the monthly, if we look at the most recent price action, what can we identify? Right in here, we are breaking structure to the upside in a bullish trend. So we're creating higher highs and higher lows. We've currently just retraced with this black candle, and we are starting our next impulse to the upside. We are likely to see this impulse create a higher high somewhere up in here. So we are currently bullish on the monthly, and that is what we would like to see, is more bullishness continue. So we have a bullish sentiment on the monthly. So if we want to get our time frames in alignment, we first have our first one, the monthly. Doing our multi-time frame analysis, we have our monthly time frame telling us that we'd like to see price continuation to the upside, if not breaking the upside, at least to come retest some of the highs, because this is the most recent structure level that the market will encounter before it stops. So on the monthly, we have that going for us. If we drop down on the weekly, what can we identify on the weekly? Simply put, we broke some structure to the upside, and that is further confirmation that after this retrace, we want to see more continuation to the upside. So we're breaking structure to the upside, and we also have this candle right here, which simply is a wick left behind with a bullish close. Means that price went up, came to this area, and we have pushed down on the close. On lower time frames, what does this pattern start to look like? It looks like an impulse retracement and another impulse to the upside. So we want to see the next candle fill in this wick, which is telling us that we want to see more continuation of bullishness on the weekly as well. So we have two time frames in alignment so far, which is our monthly and our weekly. If we go down to the daily, we can keep our charts clean, get rid of this. What do we see? We see that pattern, the most common pattern in the market, a little more prevalent, as we have a clear impulse, which an impulse is just a break of structure in the trend, or some break of structure with extreme momentum. We had resistance in this area, we came back, retested it, and then we broke above it. So this is our structure resistance. On this side, we should see it acting as structure support, which it currently is, and that is further continuation of us wanting to see more bullishness on this GBP USD market. So we can get a little more into it, adding some confluences. If we take our Fibonacci, we want to get people information on our retracement. If we want to get information on our retracement, we can use our Fibonacci tool, and our retracement will tell us the best possible area in order for us to enter into the trend. So it's when the retracement is going to end, and it will tell us when the next trend is supposed to continue. The next impulse is supposed to continue. So this should stop with a lower low somewhere on the Fibonacci level ratio tool, and we should start to see that the bullish bulls should kick in and start to see prices continuing higher. How do we do that? We take our Fibonacci to get information on this retracement retracement to see where it's going to come to. We would like to see it come to most previous resistance, now turn support, but just to get a little more confluence and information, we can take our Fibonacci tool on the impulse, which is from the low to the high of this current market. We have no candles that are of a different color. They're all the same color in this move up before we start to see candles of different colors. And then what can we identify? That we have a pullback that comes down to around in between the 50 and the 618 Fibonacci ratio level. So we have a perfect rejection of that area, and from there, that's matching up with structure. We should see continuation to the upside. We currently start to see a bullish candle, and so we drop down on the 4 hour because this is exactly when we expect the bulls to kick in and the trend to continue to the upside. We can get rid of that, keeping our charts clean. We know we had a perfect touchdown here. If we get a little more exact on the daily, take our Fibonacci from the low to the high of the daily and see what we get. Same thing, comes right back down into this area, which is previous resistance, now turn support. But we can't just jump into longs just based off that. What do we need to have all of our time frames in alignment? So we're starting to see bullishness on the daily. We have the candle, the next one's supposed to fill in the wick on the weekly with breaking of structure, and on the monthly as well, we have a bullish continuation so far, which looks like it's going to complete the next impulse on the monthly. So we're not entering on the daily. We want to use those for our direction. That's our bullishness. So we want to get our directional from our higher time frames, which our higher time frames triumph the lower time frames. Let me repeat that. The higher time frames triumph the lower time frames. The monthly time frame, if the monthly is bullish but the weekly is bearish, the monthly triumphs the weekly. So you should be looking for buys and not sales. If the weekly is bearish and the daily is bullish, you should be looking for sales on the weekly or on the daily before you start to look for buys, because you want to have the higher time frame triumph the lower time frames, because that's going to indicate where the direction is going to go overall. So as long as we get our directional time frames, our monthly, weekly, and daily in alignment, we know that we can start to look for entries on our entry time frames. Now we need our entry time frames to be in alignment with our directional bias as well. So we can't enter into a trade on our entry time frames if it's not in alignment with our daily, weekly, and monthly bias. So we need to see bullishness created on our entry time frames, which is lower than the daily, anything 4 hour, hourly, 15, 5, 1 minute, 30 second. I wouldn't recommend anything lower than the hour, but if you do use those, still the same rules apply. Now, this is about that time. What was the time of the trade? So at 9:20, we going in, and right now it is currently 1 a.m. in the market. You know, this is when I wake up, come to the market at 1 a.m. and this is what we're presented with. So with this overall view of the market on the 4 hour, what can we identify? Well, we are currently breaking structure to the downside. We recently broke this support level, came back. We did not create any higher highs. We created a lower high actually, and then we created a lower low. So that is bearish structure, and we do not want to enter in on bearish structure. We want to wait until it's bullish in alignment with the direction that we want to trade. So what are we waiting for? Well, the market started to make a move up, and we're starting to make some bullish structure. We're not breaking too much structure on the 4 hour. We recently broke this level of resistance in here, but we still have a major level of resistance right here. So this is our major level of resistance so far on the 4 hour that we would ideally like to see broke before we get in on this market. Even though we are starting to break structure to the upside, that's not all that I use to get into the market. Some may, but that's not all that I use. And on top of that, we're starting to see more of the most common pattern being created. So we have an impulse to the upside, we have a retracement, another impulse. We're going to expect some more retracements and impulse if we're going to see this market create higher highs and higher lows. It's only logical. It's the only way the market can move is in those waves. So if we play it forward, one more candle, which is the 5 a.m. candle Eastern Standard Time for me, we had a break of structure. Price broke and closed above the structure, which was giving me indication that yes, this market would like to be bought. We're going to make our move to the upside. Our directional time frame just giving us indication of move to the upsides, so we can go ahead and look for moves to the upside. Now if we play it on the hour, we can get close to the 9:20 time, and this is 10 o'clock. Even though we're not triggered, we'll go back one, but at this moment when the price was breaking up, broke above structure, we said we're going to go ahead and enter in on this trade. So we're setting our trade up. How do we find our stops and our targets? Well, we know we want to enter in right around here. This is most previous previous resistance now turned support, which I can't give you all the rules to the strategies that I use. They're only for the people in the program. So you get in the program, you get those. But what I can tell you is that this is previous resistance now acting as support. We simply put our stop loss below the lows, and then we targeted a higher high using our higher time frames to give us a favorable risk to reward, which is a 2, 3, 4, 5, 6, 7, 8, 9, 10 on up risk to reward. Simply put, we took our Fibonacci on the retracement of the daily retracement, and we got a minus 27 up in this area, and that's exactly where we put the take profit. So if we take that off and we drop back down to the hour time frame, we can see that this right here is 9 o'clock. At 9:20 we were triggered, or the trade was sent out. I'm gonna say we were triggered. So this is 10 o'clock, 11, 12, 1, 2, 3, 4, 7, 8, 9, 10, 11, 12, 13, 14, 15. All right, we're triggered into this market. We didn't get triggered until 8 a.m. the following day, which if we look at it from a 4-hour perspective, you can see that it's just a few candles. Didn't really went too far, didn't want to show you that, but we were triggered in. So price was up here. We were then 1, 2, 3, 4. This one exploded to the upside, but it failed to break the structure. Let's go down on the hour. We'll go back. You see that this is the resistance. This is the structure resistance that we were being held, gave us the opportunity to get in this market. If we were to break above this level, we'd no longer be looking for the trade because it's breaking structure. In order for us to get triggered, the market would need to break structure to the downside, which would put us back into bearish structure, which is not ideal if we want to be buying the market. So you want to try to get in at the beginning of the impulse. So on the retracement, best if the market's impulsing, retracing, and it's going to start the next impulse to the upside, this area is the best possible area to get in. It does you no good once the market reaches the highs to try to get in for a buy for another impulse, because the market's already shown you that it does not want to break above this level. This is lower probabilities for this trade. So what we're talking about is putting our probabilities in our favor along with the time frames to give us best chance of winning our trade. So once we're triggered into this market, simply just follow the rules of the strategies which are available in the program, plug again, and we can see what happens. Price starts to break structure to the upside. All right, so we'll go risk free because like I said, in order for our entry to be hit, we need to be making and breaking structure to the downside. And if we're breaking structure to the downside, I don't want to be in a buy. So I'd rather close out right here. No loss. I need my capital to take the next trade because there will always be another trade. So I'd rather get out at break even if the market does break back up to the upside. It's lower probabilities that that will happen, and it's more probabilities that something like this would happen in order for this to happen on the market. So in order for our entry to be met again, it's probably not ideal for us to be in this trade any longer. So we are risk free on this trade and we're just riding it out. Risk free, that's the best type to be, and we can see what happens. Price starts to break structure to the upside, further confirming the bias. So we found a level of the market in there, we stayed above it, broke above it, found another level in the market that we closed and broke above, stayed above it, played one more, and TP is hit. So the take profit gets hit for a nice 132.6 pips, risking 38.8, and it was a nice 3.42 risk to reward ratio on this trade. Really easy to sit through once we were in it. So gave us the best probabilities to win this trade because the time frames that we used, the directional time frames and our entry time frames, were all in alignment. Let me put it like this. I used everything that I knew, basically everything that I've gone over on this channel. So I would recommend you start from the beginning and work your way to where this video is now, and then continue to watch. So make sure you are subscribed. But I've used everything that I've gone over in previous videos in order to find this setup, mainly using structure the right way and multi-time frame analysis. So once we got the structure and everything on our side on all of our time frames using multi-time frame analysis, it was okay and greenlit to take this trade at previous resistance, now turned support, targeting a higher high with our stops below the low with a favorable risk to reward, which is over a 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 100 risk to reward. So overall, take profit hit. That is how you use multi-time frame analysis to find the best probabilities and best setups for trading. I appreciate you for viewing. Make sure you drop a thumbs up if you did learn anything from this video. A subscription would be helpful, so go ahead and subscribe and make sure the post notifications are on so you do get updated whenever I do drop some educational content. like this here. Also, in the links in the description, there is the opportunity to join the program in which my strategies, which I did not reveal all the rules and all the intricacies that I use in my strategies in this example, but they are available in the program. Also, you can trade with me every day. You have the opportunity to take the exact trades that I take every day with the correct entries, the correct stops, and the correct targets. I also do Q&As every day, answering all the questions that you submit. Overall, we'll be updating the program continuously because it is lifetime access. So you have access to me for my lifetime as long as I'm here, and all the nuances and concepts that I learn in trading will be available to you throughout the program. So I think it's a really good place for any trader and good value for you because it is updated every day. With that said, that is it. I think I've plugged everything, jammed all the stuff in there I could. I hope you have a profitable day on and off the charts. And until next time, I holla.